Brought down by bad mortgage investments, Lehman, which has 25,000 employees, will be liquidated.
The federal government loans American International Group, AIG, $85 billion.
This is a different kind of market, and the Fed is asleep.
The federal government is stepping in to stabilize Fannie Mae and Freddie Mac, the two mortgage giants that have been threatened by the housing crisis.
The Bank of England has pumped £75 billion more into Britain's ailing economy with a new round of quantitative easing.
You print a couple $1 trillion, and all of a sudden, people start to worry. So out of this worry, we have something called the Bitcoin.
Welcome to On the Brink. I'm Matt Walsh.
And I'm Nick Carter.
And this episode is brought to you by Coinmetrics. And here is the Metrics Minute.
Today's Metrics Minute. The transaction value of stablecoins is near an all-time high of $25 billion a day. Stablecoins not in a bear market. Since November 8th, the Tether supply has decreased by about $4 billion from $67 billion to $63 billion. USDC has experienced a slight uptick in free float supply from $37 billion to $40 billion since November 8th. The price of wrapped Bitcoin has deviated from underlying Bitcoin, but it has begun to recover. It's currently still below its Bitcoin reference rate. That's your Metrics Minute.
That stablecoin volume, it's one-way flow probably, right? Off exchange into bank accounts?
Yeah, I mean, I don't even know what's going on. I was looking at this data. It was in Coinmetrics State of the Network. Excellent newsletter. It is remarkable. Stablecoin transaction value has just grown and grown and grown. I looked at Bitcoin and Ethereum. Bitcoin transaction value is back at 2020 levels. So it's come way down. So stablecoins definitely continue to validate themselves as like an actual medium of exchange.
Yeah, people hopping right into dollars, that's for sure.
Interesting that Tether supply has come down a bit too. I had this thesis that Tether holders couldn't redeem their Tethers because if you think about the kind of person that's a Tether holder, it's also the kind of person that probably doesn't have good access to the U.S. financial system or has bare impediments to doing that. But some of them are now redeeming, reflecting the negative carry of holding a stable coin.
Yeah, I think certainly some of those holders will not be able to get out because they just don't have an alternative. But, if you have an alternative in USDC, now you're probably seeing some people rotate from Tether into other stables.
Have we discussed my Tether collapse scenario hypothesis?
No. Should we do that now?
Man, yeah, this is going to be a great one for the Fudsters. So I think Tether could fail, not due to not having reserves, but just because the U.S. government basically harasses them into submission and eventually gets whoever the custodian is holding the treasuries to freeze them and stop redemptions. And then I think what happens there is it starts to trade at a discount, but not a horrific one, like maybe 20 cents on the dollar. So let's say it trades at 80 cents. And Tether holders that can't exit because they can't redeem. So you might imagine there might be some sort of orderly wind down process where, you just redeem your Tethers for the underlying and that's it. A lot of people wouldn't be able to pass the KYC to redeem in that situation, right?
Sure.
Because they don't want to necessarily dox themselves to the U.S. government, or they just can't, accept, a treasury or whatever. And so they voluntarily accept a haircut to get out of Tether, and then some arbitrageur, a Western fund, buys up all those claims at 80 cents on the dollar or whatever, and then they end up being able to perform that redemption.
I don't think that's necessarily far-fetched. I mean, if you think the U.S. government enforces on Tether, I think that's actually probably the default of how that would get wound down. So, yeah, I don't think that's a tinfoil hat conspiracy.
No, it's not. Well, I don't think it is. I definitely one of the scenarios I think is actually likeliest here is the U.S. government eventually gets fed up with there being this massive crypto Eurodollar system, which is just out there, which is unlike the onshore stablecoins, is much less regulated. I mean, it's not like the onshore ones are even that regulated. And they're like, well, we're going more for capital controls these days. We have to stop these stablecoins. And they eventually identify who the underlying custodian bank is.
Well, I think everyone kind of knows already. It's just a matter of, are they going to put the screws to those banks, the couple banks there?
And I think in a period of financial repression, that becomes more likely. Like capital controls, credit controls, stopping international capital flows, that all becomes more likely. So I do think the government has a motive if they want to carefully, tightly manage the economy and stop these outflows. The Chinese government has a motive too, frankly.
I would think China would have more of a motivation, even just all the leakage is coming from China.
Yeah, exactly. Anyway, so that's my Tether. You could say I'm a Tether truther of a sort. I think they have the collateral, but I also think it could be forcibly wound down.
Send us some Tether FUD dice, Tether.
Yeah, we talked about this, right? They stole our FUD dice.
They stole the idea. Yeah.
Where are the dice?
I don't know. It's unacceptable. Well, this episode is also brought to you by Talos. Talos powers institutional access to digital assets. Whether you're on the buy side or you're on the sell side, whether you're in TradFi or a crypto native firm, you can use the Talos platform to enable the entire life cycle of your trading experience. You can trade on the API or on the web-based GUI, and all members of the ecosystem are connected on Talos, whether that be prime brokers, lenders, investors, custodians, exchanges, OTC desks, and more. They have the best leadership team in the biz, so head over to talos.com, that's TALOS.com, to learn more.
So, a big Castle Island content week.
We had a big week. So we had Mike Belshi on earlier in the week from BitGo, talked about the unfolding FTX fraud, talked about MPC custody, talked about market structure. So always good to chat with Mike.
You did not bring up the wrapped Bitcoin issue. That was an oversight, I would say.
I did not ask about the wrapped Bitcoin issue. Would you classify that as an issue at this point?
I mean, yes, I absolutely, it's an issue. The key became stale. A bunch of the signers, lost access to their keys.
And so where do we stand now? It's like 8 signatories on that. It used to be 15.
Look, we're good, but we lost a few good ones, and it's tight now. We can't afford to lose that many more signers.
Well, I think weren't a couple of them like FTX fraudsters, so we're good to get rid of some of those guys.
Yeah, but you don't want to run it too close. You don't want to be in a 9 out of 9 situation.
Definitely don't want to do that. But in any event, it was good to have Mike on, one of the good guys. Also sat down with Mahesh Ramakrishnan from Escape Velocity, talked about decentralized wireless, which is one of the more fascinating emerging areas. Very interested in that category.
That's right. So busy week for you. Also in Civ News, Ria, our fellow colleague and Civ occasional co-host, is Forbes 30 under 30.
Huge news for Ria. Some high quality people on that list this year. So really exciting to see Ria. A couple Castle Island portfolio founders in there as well.
That's right. Chris Maurice from Yellow Card. Congrats to Chris. So yeah, some people make fun of the Forbes 30 under 30. It's one of those things that you sort of publicly claim that you would never want, that you're kind of above it in a way. But then when you get it, it's actually really great.
Yeah, I bet.
So
I never got it.
It's cringe and base at the same time. I was on the record saying I would not have accepted it, but I didn't have to face that because I was never selected.
They just never gave it to you. Yeah.
And then I aged out. I'm officially 30, so it's all very depressing.
Your 40 under 40 time will come, though, I'm sure.
The other thing, over 30, your hangovers get immensely worse.
Oh, is that right?
It's like a light switch. Did you not experience this?
I did experience that. I think there's also a factor of when you have children, something in your body goes and you just can't hang anymore. It's just like 10:30 hits and you're like, I think I'm going to bed.
I would say you can still hang.
Thank you.
Yeah.
I can turn it up, but it's kind of like I'm an off the bench guy. I don't think you're going to see like a full season out of me anymore. It's spurts.
Speaking of sports analogies, have you been watching the World Cup? I know you're a noted soccer skeptic, but have you been watching the tournament?
I have not. Sean was, we were in the office. We had it on. Sean was going crazy when that goal scored, but I was not. I think I was probably at my desk writing something angry about what I'm seeing in the market.
The U.S. made it through to the next round. It's all very exciting.
So what happens now?
Yeah, so the U.S. qualified behind England in the group. Both of my countries made it. Very proud. Dual citizen here, both my teams. And the U.S. will play the Netherlands this Saturday. So that'll be a very stern test for them. They could win, but they're certainly the underdogs.
Well, I'll be rooting for the U.S. for sure, but I don't think I've ever watched a full soccer game, if we're being honest.
Well, I am rooting for England. I signed up for FanDuel, and they gave me a free bet.
Okay.
And so then I put it all on England winning. They're very generous with the free bet. That seems like an FTX business model. I don't know how that can possibly work.
I think it is, yeah.
But then turns out you can't use FanDuel in Florida. I was in Maryland at the time, and so now I can't get on the app. So if I win, I don't even know if I get credited.
They just take that. It's like a customer deposit on FTX. That just belongs to them now. That's
straight
actually,
to Alameda. Yeah,
they have a
straight
side,
to their proprietary
side betting
arm.
operation.
Yeah.
And it's, you don't even worry about it. You opted into it probably.
They've accumulated an extremely large margin position, which they feel has a moderate level of risk currently.
Yeah, I think that's right. Well, some deals got done this week. Should we head into the deal section?
Still deals. Yeah.
First one up is XDAO. This is a startup that helps DAOs scale. They have raised $2.3 million at a reported $50 million valuation from Panoni, DWF Labs, Grizzly Capital, and others. Can we let's make a note to check that we're not being punked on that one?
Yeah. Next up, we have Kiln, an Ethereum staking as a service business. I like all the metaphors for staking being like baking and like pottery and hardening. I like that. It's nice and tangible. They have raised $17 million from Illuminate, Consensus, GSR, and Kraken.
Next one up is Ajara. This is a Cameroon-based crypto platform. They raised $8 million from Anthemis and Dragonfly Capital.
Then we've got Game 7, DAO focused on blockchain gaming. They announced a $100 million grant program to fund up-and-coming blockchain-enabled games. I would say we're still waiting for the first good blockchain game. But
when you announce a $100 million grant program, does that mean that you have a $100 million grant program, or does that mean that you announce that you want to do a $100 million grant program?
It appears that they have the money. They're a gaming-focused DAO. I don't know where... Oh, my God. Yeah, so they have a $500 million committed from other DAOs, the BitDAO, and the blockchain game platform Forte. So, you know what? The Fed's got to raise rates.
Well, that's we don't
DAOs
do this.
donating to other DAOs.
Scratching my head over here.
This recursive DAOs donating to each other. I don't know, man. I don't know. Where's Jay Powell on this?
I don't know. Next one up is Roboto Games. This is a Web3 gaming studio. They raised $15 million from Andreessen Horowitz, Animoca, and Gumi Cryptos, among others.
Then we got Keyrock, a crypto market making firm. They raised $72 million from Ripple and 6 fintech ventures. Still firms being raised.
Market making firms. That's kind of an interesting category right now. A lot of market making firms got dinged, obviously, by the FTX having, deposits on that platform. And I think the liquidity landscape has changed a lot. So there probably are some great opportunities if you're a crypto market making firm out there.
Yeah, I bet. I mean, gotta imagine there's a gap in the market, not just Alameda out of business, but some of their peers as well.
Next one up is Animoca. They are launching a $2 billion fund to invest in metaverse businesses. Did they raise this yet? The same question as earlier. So they have a $2 billion war chest over there?
I mean, that's gargantuan.
So it says they plan to set up a fund worth as much as $2 billion. That's a lot. Next one up is Frankie One. This is an identity management and fraud platform. They raised $15.4 million from Greycroft, Binance, Kraken, and others.
Some chunky raises this week. Lastly, we have Fleek, a Web3 developer platform. They raised $25 million from Polychain, North Island, Distributed Global, and Coinbase.
Yeah. Bad boys, what you gonna do? you gonna do when they come for you? Bad boys, what you gonna do? What you gonna do when they come for you?
All right, so is it just like every time we talk about FTX, I think it's just consider this to be like the bad boys section, right? I don't even know where to start today.
We need a running. I mean, at this point, it's just all bad boys.
Just everyone associated with FTX is such an odious creature right now, and Sam is just the top of the list. So I guess the first update is this guy's not in jail yet, has not been arrested. Again, Bernie Madoff was in jail the next day when that came
He doesn't even think he's going to jail. That's the best part.
So where do you want to start here? Like,
he doesn't think he did crime.
He did an interview with Andrew Ross Sorkin. Is it Aaron Ross Sorkin? Andrew Ross Sorkin. Andrew Ross Sorkin. He was pretty evasive, lied through his teeth. I have some issues with that. He did one with George Stephanopoulos that was on Good Morning America today. We're recording this on a Thursday. I thought Stephanopoulos was more hard-hitting, but SBF lied and evaded throughout that. Let's just talk about the media strategy here first, I guess. What do you make of these two interviews?
Yeah, he's actually been giving interviews out like candy. Question is, like, Sam's not dumb, right? Like, we know he's a smart person. So what's the explanation here, right?
So do you want me to take a chunk at that, take a pass at that, or you have a theory?
I mean, so of course I've got a theory. So one explanation is he's actually lost 100 points of IQ, and he's lonely, and he's talking to journalists, right? And he's off the reservation. He's not listening to his lawyers. I don't believe that theory, Matt. You know, you can probably tell by my tone. I don't believe that.
No.
2, he's trying to achieve something with his press tour, right? He does have a crisis management comms firm. He's got incredible legal connections. Both of his parents are lawyers. He has the resources to hire and marshal the best law firms in the world. So my explanation is he's positioning himself for a future case. He understands that this case will be played out in the court of public opinion as much as in the court. It's not like those normal cases where none of the jurors know about the case going in. This will be one of those high-profile cases. It's political now, right? So if you can get members of Congress, politicians, and the general public to believe your side even before the first, grand jury is assembled and before the first affidavit is signed and before the first deposition, you're already ahead. So what's he doing? Well, he's trying to position it like it was just negligence as opposed to criminal fraud. And I think that's what his whole press tour is all about, is getting softball or semi-softball interviews from journalists that don't understand crypto, that don't understand FTX very well, and laying out his side with these journalistic counterparts that don't know enough to push back or to ask him the right tough questions. So I think that's really his strategy, and I actually think it's working.
I completely agree. It's very clear that he has a crisis management firm that has taken the view that you can do a few things right now. One is try to be as sympathetic as you can. So try to just put this up to, hey, I was overwhelmed, I'm humbled, that whole 9 yards. 2 is muddy the water as much as you possibly can over the fact that you commingled these assets, because there are other companies in the crypto space where they had a business model that was prone to bank runs, where you were allowed to commingle assets, where you were effectively running a lending desk. And so Sam is out there not directly answering these questions around, did you commingle assets? Did you move exchange assets, which under the terms of service were not to be commingled? Did you move those over to Alameda, which is a hedge fund that you control? He's trying to muddy the water and just say that this was a bank run. He's trying to muddy the water on a very narrow product that they had on FTX, which was an earn product where you had the ability to earn yield, but you would give up possession of the asset. So he's clearly trying to do that. And I think the other thing, and we'll get into the people side of this with Trubucco and Caroline Ellison later, is he's very clearly trying to throw them under the bus. So if you're Caroline Ellison or you're Sam Trubucco and you think that you have any shot of staying out of prison, if you saw those interviews last night and this morning and you aren't immediately turning state's witness, then you're just getting really horrifically bad legal advice. Sam Bankman-Fried is trying to put you behind bars, and that's going to be his defense.
Completely. I thought the best interview actually was a written interview that Sam conducted with Jen Weichner. I don't exactly know how to pronounce her name, of the NYMAG, which has had the best coverage on this.
I subscribed to that last night. That magazine, the print and digital version, just because they've had such unbelievably good crypto coverage.
Yeah, not just because they talk to us. We like them because their coverage is actually good.
So talk a little bit more about this interview.
So Jen knows enough about crypto to ask actual good questions. See, the problem I had with the Sorkin interview was he would ask quote unquote tough questions, but he would never follow up on them. And he would just accept Sam's answer. So he'd ask him about, well, did you commingle client funds? And Sam would say some sort of red herring nonsense like, oh, well, actually, that's not exactly how it worked. Like, this is a margin exchange. What happened was Alameda developed a negative equity position, and we didn't account for it properly. And then the negative equity overwhelmed the positive assets on the balance sheet. And so he gives these like winding roundabout answers, doesn't answer the question directly. The problem is Sorkin doesn't know the subject matter well enough. Mm-hmm. He doesn't even know what a margin exchange is, really. I mean, he was asking questions like it was a spot exchange.
Yeah, he was out of his depth.
So I thought Jen pressed him much more directly, and asked him much more specific questions also about Caroline. So we'll put that in the show notes. But yeah, it seems to me the strategy right now is to deny that really he even knew what was going on at Alameda, which is preposterous. 90% of that company, and he spoke many times about his oversight of Alameda, to imply that it was Trubucco and Caroline that mismanaged Alameda's risk book, to imply that it was just a series of accounting errors and just the fact that they, let the risk position grow too much, to deny that they deliberately commingled client funds. Effectively, it's the same thing if you give a sister counterparty on the exchange, a closely affiliated entity, if you let them accrue a massive negative balance on the exchange without liquidating them. That's effectively the same thing as stealing client funds, right?
Of course.
I think it's literally identical, but none of the journalists know enough to press on that. And Sam is also trying to just make himself look sympathetic and do his apology tour. Unfortunately, I think it is actually fairly effective right now. I hope that we get some better journalists that can press him more directly on it.
Hopefully we do. I mean, it's puzzling that we haven't really zoned in on him. It's just puzzling that we haven't. I mean, we talked about an amphibious raid of the Bahamas on last week's podcast, and I actually had someone reach out to me, and I'm going to actually have lunch with this person. Not necessarily to talk about amphibious raids. It's just that.
Are they Navy SEAL?
Formerly I don't want to give too much information, but formerly in the realm of people that know a lot about amphibious raids. Also a very knowledgeable crypto person. So we're going to have lunch. It's ostensibly to talk about crypto stuff and to just catch up. But if you don't think I'm going to be asking about how amphibious raids of foreign island countries work, then you're crazy.
So there's already members of crypto Twitter that are running around the Bahamas looking for Sam. So I'll admit it. I actually contributed to Gabriel Haynes's fundraiser.
Is he there? Is he down there?
He raised $10,000, which seems like, to be honest, a suspiciously large amount of money to buy a flight and a hotel to the Bahamas. But so he went to Nassau. BitBoy, I think, went.
Yeah, that guy's having a moment, huh?
They're not exactly the kind of people you might expect to take down Sam, but this is kind of what happens. I mean, it's funny, but it's also not that funny. This is what happens when the government is derelict in their duty. There's a vacuum here.
To be clear, I don't want a private citizen to go on an amphibious raid of the Bahamas. I think it makes all the sense in the world for the United States government to say, this guy's still walking free. He defrauded thousands of Americans, and he has a bunch of money that he siphoned off to the Bahamian government illegally. So why don't we just go grab that money? I think we've fought foreign wars over a lot less than this.
Yeah. I mean, this is less provocation than the Gulf of Tonkin. Like, the U.S. government has a habit. I'm not saying that they should be consistently, illegitimate in their operations, but they do have a habit of employing, they certainly have the ability to, manipulate foreign governments into certain judicial outcomes, right? So Julian Assange, clearly prosecuted at the behest of the U.S. government by their foreign proxies. The Tornado Cash developer undoubtedly the U.S. government pressured the Netherlands into their insane treatment of him. I mean, like, it's not like the U.S., always follows the absolute strict, rigid letter of the law. Like, they have the ability to influence outcomes here for good or for ill. The fact that the Bahamas is just operating on their own basis, apparently, completely free of encumbrances, and is completely mismanaging this, does speak to the fact that the U.S. government has done nothing so far. They could easily have applied pressure to the Bahamas to make this process more orderly or to begin extradition, anything like that. They haven't. So I think that is a significant failure.
Yeah, I don't know what's taking so long. A couple other FTX nuggets. So Beto O'Rourke, Texas Democrat, apparently got a $1 million donation, returned it actually, I think, before the bankruptcy filing. So good for him. The Senate Leadership Fund, which is affiliated with Mitch McConnell, Republican Senate leader, they received $1 million donation. We're just going to have so many more of these stories around how many political donations were. The Texas State Securities Board, they think that Sam is going to go and testify on February 2nd. Looks like he has a summons. That was about an investigation that was well before this whole fraud thing came up. So Lord knows if he's going to be able to do that. Sam also doesn't know what happened to his $100 million Twitter stake. It's like he lost it, like his car keys or something. Like just how many, you can't make this stuff up.
Yeah. Some other interesting regulatory stuff. CFTC chairman was testifying in front of the Senate today about FTX, admitted that they had met with FTX 10 times. Of course, they were very closely engaged, certainly more so than the SEC, not implying anything sinister there, but FTX and Sam were clearly known to U.S. regulators. And I resent this new narrative coming out of Gensler and publications that are close to him, that he's been leaking information to, that Congress was trying to stop Gensler's investigation into FTX. There was none. But, there clearly was nothing going on. Everyone was in the dark about this. The SEC's role in this was to force U.S. clients overseas into the arms of FTX by inhibiting the ability of onshore exchanges to operate properly. That's the SEC's role in all this.
The other thing that's going to be interesting here on the SEC, so I don't know at what cadence you're supposed to release your meeting notes with who you spoke with, but the SEC chairman has not released, under the Freedom of Information Act, has not released his daily schedule since it looks like Q2, like sometime over the summer. And Charlie Gasparino, who's now, I guess, over at Fox Business, reported that IEX and FTX had this pact. So FTX was an investor in IEX, and that they were apparently meeting with the SEC around getting a regulated venue in the United States. What's going on there? I mean, I don't think Brad Katsuyama does a lot of interviews, but it would be nice to hear from him. It'd be nice to actually see the meeting docket for the past 6 months and figure out what was going on. But there's a lot that stinks about this.
I mean, FTX was trying to buy their way into responsibility through any avenue they could. There was this bank acquisition, which is insane.
The Farmington, did we talk about that last week? I went on this like long rant on this guy, Ramnik Arora, who's the head of product. He was the head of corp dev, and he was the head of investor relations. And my point was that in those three roles, you should have known what was going on. So if you're the head of product, you should know how the product works and that there's no cold wallets. You should know about negative margin positions on the exchange. As the head of corp dev, you should know that these lenders that you're, quote unquote, bailing out, you're doing it because Alameda has huge loans with them. As the head of IR, you should, be representing that why Sam is able to pay $500 million to Sequoia, Altimeter, and Multicoin. So the whole point of that was that you should have known these things. But then you have this, apparently he led this Farmington Bank thing, which the company had less than $10 million in deposits, and they put $11 million into it for like a 9% stake. It's just...
And then immediately injected client deposits, started washing money through the bank. The San Francisco Fed signed off on this deal.
They went from like $5 million in deposits to $84 million immediately.
So
how is that not a criminal? How is that not a criminal offense?
I mean, the worst part for me is this is an offshore Bahamanian unregulated entity buying their way into the Federal Reserve System through this bank. The SF Fed signed off on it. So apparently you can do it if you're Sam Bankman-Fried. You can just get a bank charter. Meanwhile, Custodia, formerly known as Avanti, the Kansas City Fed has been sitting on their master account application, which they did through the most legal, rigorous onshore process imaginable, literally with this special purpose legislation written in Wyoming. The Kansas City Fed's been sitting on that application for 2 years, unconstitutionally.
Crazy.
What's going on here? So if you're Sam, you can just flout the law, and if you play by the rules, you get crushed? All right, well, Matt, last week your Bad Boys segment was oddly popular. I have to give you some credit for that. This week we have a new bad boy. We haven't even talked about the Three Arrows boys. I guess maybe we can get to them later. This is another boat owner. Which one is this?
Sam Trubucco. So let's talk a little bit about a nomination for Bad Boy of the Week for Sam Trubucco, who's apparently from Boston, went to Roxbury Latin, just immediately rockets up the list of very well-known Roxbury Latin alumni. So congratulations to RL on this one. Sam Trubucco, whether or not you're guilty or not, it might be a good time to just come out and say, hey, I'm cooperating with the government and I can't talk, or else this is going to get pretty ugly. So he was the co-CEO of Alameda Research. What we're starting to find out, so he left, obviously, over the summer, which is when a lot of bad things were happening. So my questions are pretty basic. I think they're questions that anyone should really be able to answer. I'm sure the federal government will have a lot of these same questions. So my first question is that as the co-head of Alameda Research, did you know that you were structurally able to run negative equity balances? And did you think that that was legal? That's question number one. I would think that you'd be able to answer that, right?
And be exempt from liquidation on the exchange.
Right. And so that's the second one, is that you were running these negative equity balances. You're exempt from liquidation. Where did you think the money was coming from, Sam? So you're running this, you're running negative equity. You post a $3.7 billion loss for tax purposes at Alameda Research. How much venture capital did you raise at Alameda? Certainly it was nowhere near $3.7 billion. I don't even think it was more than $20 million. And so you're running negative equity. What did you actually think was going on? And when did you know that customer deposits were being moved into your margin account on the exchange? That's a pretty simple answer. I would imagine that's a pretty simple answer, is that I knew about it and I decided to leave.
And what's more is Sam is now disclaiming all knowledge and responsibility. Let's say that's true. Certainly isn't. Someone knew.
Someone knew.
You look at your P&L. If you're a trader, that's the first thing you do.
You're the co-head of Alameda. You post a $3.7 billion loss. Where do you think the money's coming from? And Sam Bankman-Fried is saying he didn't know. So who knew? Obviously, everyone knew. The next thing is that there's $1 billion of personal loans taken out by Sam Bankman-Fried during the time that Trubucco was running this thing with Caroline Ellison. But you just posted a $3.7 billion loss. Did you think that that was a normal thing, that the owner of the business was taking out $1 billion against it? Where did you actually think this money was coming from?
I mean, not to mention $1.2 billion investment into Genesis Digital Assets.
$1.2 billion in which SBF took the board seat. So don't say that you weren't involved in it, right? Sam Bankman-Fried wasn't involved in it. Yeah, it just doesn't stand up. So the other thing that would be great to get Trubucco's view on is the Coinmetrics report around Q2 and the movement of FTT tokens when Trubucco was still there. And so this massive bailout that you can see on the blockchain, what's the deal there? So there's just a lot of smoke on this thing. And it's very clear that, and we didn't even talk about all the stories. So the Wall Street Journal has a story around Alameda over the life of its, terrible time on earth here as a going concern business, was front running all the FTX listings. So just market manipulation, the lowest possible ethics that you could ever imagine. for the leadership that was running that. So I think, it's very valid for the industry to ask Sam Trubucco for a little bit of an answer. And if you can't answer Sam, then, I'd probably be satisfied with I am cooperating with the federal government of the United States to try to make depositors whole here. And I can't say any more, but I'm cooperating with the federal government. That would be the appropriate response right now out of Sam Trubucco, because you're going down on this one way or the other. Sam Bankman-Fried is going to put you under a bus.
Yeah, it is remarkable that the general lack of scrutiny of the other top executives, Sam's lieutenants. It was clearly a small group of people that are running this organization. Very little in the way of actual genuine legal or audit personnel, compliance officers that apparently didn't exist. So it was just a tight cabal, these people. The fact that they're all running it, running Alameda, running FTX, of course you acknowledge this. It's not just a Sam Bankman-Fried story. It's about the others too.
You can't run a scam like this with one person. And, Sam Bankman-Fried is going to play this. It was just two people, and it was the people that were running Alameda, Trubucco and Caroline Ellison. And you can't do a scam of this magnitude with those two people either. So there's a wide net here, and we're going to find out who's in it.
Yeah, what a week. Elsewhere in Bad Boys, didn't even want to address this. Kyle Davies appears to he's grousing about something or other. I think he's rebranded himself Bitcoin maximalist. They can have him,
Kyle Davies, just shut the hell up. It's just no one wants to hear from you, Kyle.
Why does he want to debate me? Debate what, bro? Like the length of your prison sentence? Like the taste of prison food? There's nothing to debate.
Kyle, let's talk about the fact that you solicited U.S. investors onshore with your Deribit offering. Let's talk about your Warbler Capital deal where you took all the kids' money for a sub fund that you raised from U.S. investors with false marketing. Let's talk about the fact that you lied to all your lenders. Or let's just not talk about this guy ever again, because this guy just doesn't deserve to be covered. And the fact that we're even engaging with this clown on this attempted redemption tour is just too bad.
Yeah, I mean, word is that he's out there trying to get forbearance from his creditors and offering them upside and, his future endeavors. It's like, there's not a lot of upside to offer there. There's only downside. So it doesn't seem like any of them are taking the bait. It does seem like that's why him and Sue came back. They're trying to raise a new fund for some nonsense. Don't think they're going to be successful in that.
I mean, who would give money to these guys? That's just the most insane thing. And unless these guys magically discovered a way to travel to distant planets and they have a patent on it, I don't think it's worth even talking about it.
Yeah, so pretty embarrassing. I was encouraged by crypto Twitter just roundly rejecting his idiotic overtures.
I mean, the guy's in a non-extradition country. It's coming. We'll do the conversation in the Southern District of New York. We'll do a podcast there for sure. And it will probably be, I will be speaking into a telephone and you'll be limited to about 20 minutes. That's how that podcast is going to work. You did have a tweet that you wanted to do some charity boxing match. I think that's beneath you. You can't let this guy's going to be having enough boxing matches in his future when he's in a federal penitentiary. I don't think he needs you to put him in a body bag.
That was an ill-advised tweet. But yeah, no, it was a sincere offer. I mean, it's the first thing, maybe it'll be a start in terms of if he wins, he can take the purse and try and pay back his creditors. It's going to be a long road for him. That was a sincere offer. I can make weight at 155. I know people made fun of me for that. To be clear, I walk around at 170, but I think I can make weight at 155.
That's pretty good. Yeah.
So that's how it works. You cut weight. I don't walk around at 155.
Kyle Davies doesn't strike me as the person. He's never been punched in the face, and you can really tell by his personality. He's like a private school kid who never got punched in the face.
Neither have I. I've never been punched in the face. It doesn't sound pleasant, but I would do it for the sake of his creditors. They need a little hand here. So anyway,
I thought it was a good idea. It was directionally correct, but let's just stop talking about Kyle Davies.
So we're not debating him. There's nothing to debate. There is the boxing thing. It has to happen on U.S. soil, and that's that.
All right. So in other news, this was expected. So BlockFi has filed for Chapter 11 bankruptcy protection. They had a loan out to Alameda. No surprise, Alameda did not pay it. So it looks like it was a quick process there to make that filing after they could not pull down on the credit facility. So this one will be argued. The one thing that is kind of interesting about this filing is it looks like BlockFi has a perfected security interest against the Robinhood shares, which are in an entity that is owned by Sam Bankman-Fried that I can't find it in a bankruptcy filing. It's called Emergent Fidelity, where he pledged those shares to BlockFi basically on that Alameda loan. So who knows how this is going to play out, because I think they wouldn't give BlockFi the shares, and so BlockFi had to file bankruptcy. Right. Could have been avoided if they had the shares and they were able to liquidate. That'll just be fought in court. I don't know how that's going to work. Obviously, Sam bought those shares fraudulently. It's like customer money at FTX that bought the Robinhood shares, but technically BlockFi should own them.
Yeah, I guess they're senior. But yeah, I mean, it's just so perverse. Thinking back at the bailouts, quote unquote bailouts, that was all being done with client funds. Those weren't bailouts. They were themselves in need of a bailout.
Yeah, no, it's crazy. I mean, and BlockFi still has this claim against Three Arrows. So the whole thing it's just so circular.
Yeah. Next up, Casa supporting Ethereum for self-custody. Of course, Casa, the most popular and widely used Bitcoin multi-sig tool provider, now moving to Ethereum. The maxis didn't like it, but
people think you forced them into it, but it's this was
it was all me. I'm the puppeteer behind the scenes. I I make the business decisions for my portfolio companies. But yeah, I mean, frankly, it was just a good idea. Like Ethereum is worth over 50% of what Bitcoin is worth. There's a huge demand for it, and not to mention stable coins, ERC20s. They all need these multi-sig custody tools. I
think the broader thing is just that Casa wants to be a key management company. They have since the beginning. I mean, back before Nick was even running it. Just it's. I remember the idea was to
Nick Newman, keys. To be clear.
Yeah, Nick Newman, Nick Newman, the guy who runs it, not Nick Carter. But yeah, I think our original investment memo for that says something along the fact that your identity on the internet could be secured by public private key cryptography, and you want to keep that really safe. And so the fundamental building blocks of that is self-custody. So great to see Casa expanding. And I think that was, if you want to learn more, head over to keys.casa. Yeah,
that was the original memo, actually. Interestingly, Binance jumped into the fray with their proof of reserves attestation. Controversial one. Jesse Powell didn't like it. I have some sympathy for that. I know I'm releasing soon a rubric to grade the quality of proofs of reserve. And Binance's one doesn't pass muster. Hate to say it. They don't pass muster. There's nothing that I found that's sort of horribly wrong with it. It's just not very complete. There's no auditor involved. It was only for the Bitcoin assets. It's hard to validate all of the liabilities. Not even sure that's possible. It's obviously needs to be done on an ongoing basis. There's just holes in it. So for the gold standard, I would look at Kraken's or BitMEX's. Different approaches there, but those are the two that I would say are really setting the bar very high.
Yeah, some form of proof of solvency here is going to be required if you want to be an exchange. I mean, there's just a bunch of these guys on the fringe. I'm not talking about Binance, but a bunch of these fringe players, crypto lenders that are still out there with these crazy high yields that I'm just like, guys, let's just clean it up while we can.
Yep. Speaking of Binance as well, they have apparently raised $1 billion to invest in their, I don't know what's the fund called? It's like
the recovery fund or something.
Recovery fund, yeah.
Did you watch this Bankless episode with Senator Pat Toomey yet? It just came out this morning.
No. Wow, that's a good get for them.
Yeah, it was awesome. It was, I listened to it on my way to work today. It was, that guy just knows a lot about cryptocurrency and public blockchains, and his take on the FTX fiasco and how that was handled and what could have been done to prevent it was just exceptional. I think he's it's too bad that he's leaving.
Yeah, Pat Toomey's definitely one of the most crypto sharp folks in Congress. We are losing a good one. But we're gaining some new members of Congress that know about crypto. So
looks like there's a bill here from Congressman Emmer to outlaw CBDCs at a retail level. That's a good idea.
Yeah. Hopefully we will soon have Emmer on the show. TBD on that to discuss the bill. There's a whole payload of legislation which the Republican House could introduce. I don't know what its prospects would be, but yeah, Emmer is certainly on the ball. In my mind, the number one crypto advocate in the House.
All right, so I think that's it for the week. I mean, we should probably get this episode out on Thursday night now that I think of it. Just the pace is going so fast here. I mean,
that's okay. Yeah, no, it's cool. I'm not busy or anything. That's
just,
fine.
What else are you doing?
Yeah, it's only Art Basel in Miami. You know, it's only Art Basel.
Art Basel? Crypto people still go to Art Basel?
I mean, it's about as busy as last year. They're still doing the NFTs. Like, the NFT people took it over again.
I'll say this about this market that we're in right now. My block clock stopped working today.
I saw that.
There's no lending market whatsoever. Credit does not exist in this system. You have people that are really smart selling all their Bitcoin. If this isn't what a bottom feels like, I don't know what a bottom feels like.
I know far too many people that completely rage quit the industry in the last couple of months. I hate to say it. You just hate to see it, you know, selling the dip.
Just
tough.
If you just get away from your computer for 24 to 48 hours, sometimes, not that I've done that anytime recently, but that's what I'd recommend to people who are pressing the panic button right now, because ultimately we're talking about a Bernie Madoff level fraudster here. Nothing is different about the thesis for why public blockchains are interesting. So take a deep breath, go outside over the weekend, get some fresh air, think about the bad boys of crypto.
Touch grass. The problem is that we do need to successfully purge them, or we need some recriminations for fraudsters. I will be very depressed if that does not occur.
That's why I'm on tilt right now with these bad boys episodes. I'm not an actual crazy person. I don't actually want to invade Bahamas, although I think that would be...
Wait, that wasn't sincere? I was into it.
I don't personally want to. I want my government to do it, but I'm not going down there with a pitchfork. But I do agree. We need to get these people out of the industry. That's the only way that we come out of this better, is just get these fraudsters the F out of our industry.
Yeah. If it doesn't happen, I am going to quit and do AI full time. But, you know, God willing, we actually bring these people to justice. I feel like we're helping, you know. We're doing our bit.
I think that's right. All right, everyone, have a safe and healthy weekend, and we will see you on Monday.